if you worry as an economist about potential spillover effects, even if it is unique in terms of their deposit base and their venture capital exposure, about
so Silicon Valley Bank ended up having to go down and declare bankruptcy because a lot of these startups of venture capital decided to pull their money out of the bank because the banks don't actually own any money. It's actually all done through something called fractional banking. So many politicians, one especially in the member of the European Parliament, have complained about fractional banking.
Commissioner, Mr. President, I rise again, I'm afraid, to make the same old hoary speech that I've been making here for several years, and that is, it is my opinion that you do not really understand the concept of banking. All the banks are broke. Bank Santander, Deutsche Bank, Royal Bank of Scotland, they're all broke. And why are they broke? It isn't an act of God. It isn't some sort of tsunami. They're broke because we have a system called fractional reserve banking, which means that banks can lend money that they don't actually have. It's a criminal scandal, and it's been going on for too long. To add to that problem, you have moral hazard, a very significant moral hazard from the political sphere. And most of the problem starts in politics and central banks, which are part of the same political system. We have counterfeiting, sometimes called quantitative easing, but counterfeiting by any other name. The artificial printing of money, which if any ordinary person did, they'd go to prison for a very long time. And yet governments and central banks do it all the time. Central banks repress the amount of interest that rates are, so we don't have the real...
So this is how fractional reserve banking works. Basically, you have one guy, goes to the bank, and he puts in $1,000, okay? The bank will take that $1,000, hold on to 10% of it, and then loan out the other 90% to a customer who wants a loan. Now this customer will use that $900 to pay another guy, okay? Then that guy gets paid with the $900 the bank loaned him. The guy with the $900 who got paid by the borrower will give the bank $900. Bank will take 90, pay out 810, and then we'll give that 810 to another person, and the process starts all over again. In a nutshell, that's fractional banking. So the bank doesn't really have a lot of money reserves for anybody. So the fact is, how do you store your wealth if you can't really trust the banks? Well, one way is you invest in gold and precious metals. Another way to store your wealth and protect your wealth is to buy land. Again, God isn't making any more land, and there's very limited left around the world. So you can always invest in land, and it can also be used to create real estate or farming, which can also create an income for you. Another thing you can do is just invest in real estate. Again, the more real estate you invest in, the more money you can get from rental properties. Everyone needs a place to live.
We saw the other one. The other one wasn't as special as this one. What did you pay for this watch?
This watch, I paid the $120. The other watch, which had some gold to the bracelet, I bought from my dad, and I paid $104 for that.
Because you saved the box and all the paperwork for it. Easily today, it's $65,000 to $75,000 in the market.
Well, the last thing you can do is always invest in luxury items. As you saw the guy from the Antique Roadshow, he bought a Rolex for $120. Now it's worth $75,000. So you can always invest in luxury items, and they always tend to appreciate over time. So it's also a good investment. If you guys want to see more videos like this, please comment, like, and subscribe.